How to invest in S&P 500. The S&P 500, a benchmark index representing 500 of the largest publicly traded companies in the United States, has long been a popular investment choice for individuals seeking to participate in the growth of the American economy. With its diverse composition and historical track record of outperforming other asset classes, the S&P 500 has attracted millions of investors worldwide. However, before diving into this investment opportunity, it is crucial to understand the various strategies and considerations involved. A fascinating fact about the S&P 500 is that it has generated an average annual return of approximately 10% over the past century. This impressive performance, adjusted for inflation, has made the index a powerful tool for wealth creation. However, it is important to remember that past performance does not guarantee future results, and investing in the S&P 500 carries inherent risks. Another noteworthy statistic is that approximately half of all American households have some exposure to the S&P 500 through their retirement accounts, mutual funds, or exchange-traded funds, ETFs. This widespread popularity underscores the index's appeal as a relatively simple and accessible investment vehicle. There are several ways to invest in the S&P 500. One common approach is to purchase individual stocks of the 500 companies that comprise the index. This strategy offers the potential for higher returns but also involves greater risk, as individual stocks can outperform or underperform the overall market. Additionally, it requires extensive research and due diligence to select the most promising companies. A more diversified and less risky option is to invest in an S&P 500 index fund or ETF. These investment vehicles track the performance of the index, allowing investors to gain exposure to all 500 companies without the need to pick individual stocks. Index funds and ETFs are typically low-cost and offer professional management, making them attractive choices for both novice and experienced investors. One of the primary advantages of investing in the S&P 500 is its historical performance. Over the long term, the index has consistently outperformed other asset classes, such as bonds and cash. This track record provides investors with a sense of confidence and security. Additionally, the S&P 500's diversification across various industries and sectors helps to mitigate risk, as the performance of individual companies can offset one another. However, it is important to acknowledge that investing in the S&P 500 is not without its drawbacks. The index is subject to market fluctuations, and there is always the risk of a significant downturn. Additionally, the S&P 500 is heavily weighted towards large-cap companies, which may limit its exposure to smaller, more innovative firms. In conclusion, the S&P 500 offers a compelling investment opportunity for individuals seeking to participate in the growth of the American economy. While the index has a strong historical track record, it is essential to approach investing with a long-term perspective and a thorough understanding of the risks involved. By carefully considering the various strategies and factors, investors can make informed decisions about how to allocate their capital and maximize their potential returns.